Welcome to another stage analysis video. It's Sunday the 5th of May 2024. I'm going to start off with a look at some of the weekly significant bars this week, as there are a number of big moves on earnings this week to cover, as well as then getting into some of the, I want to show you some of the new features with the stage analysis screener starting to come along a bit more now, as well as the regular member content after that with the watch list stocks, market breadth, industry group moves, bell curve, etc. So we'll get into that in a bit. So starting off here with Carvana, which over the last year and a half has had a ginormous move from the lows. It was an extreme stage 4 decline, so it was one of those ones that from the stage 4 breakdown area, it had over 98% move in stage 4. So not many people would expect it to recover so violently as it has, but the one thing that it has different that we don't see in a lot of stocks after big declines like this is huge volume on the up moves as it started to come back out into stage 1. So we had rising volume through the initial short covering rally. You see the volume dried up as it pulled back in, started to consolidate around the declining 30-week moving average still. And as it started to push back out once again, you can see the volume expanding dramatically again, much bigger than it had previously when it was declining in the majority of stage 4 there, as you can see. So huge volume coming into this and pushing it up, and then starting to push its way out into stage 2 around this area here. If we look at it on a daily chart and go back in time a little bit, you'll be able to see that a little bit better. So this is your, if we go through this a little bit more, all right, there we are, one day off that. So you can see this is the stage 2 breakout point, really. So there might be some arguments that the initial move above the 200-day moving average there, as it was above a weekly pivot here after a strong volume move, that was arguably, some people would have been attempting it around that area. But this move here, there was a further pivot. If we go back a little bit more here, so from this area here, so you had the pivot high from here and the previous lows. So this technically was the real stage 2 breakout area. You can see the huge volume and it had there, and also key with strong stage 2 breakouts is a break above the Mansfield relative strength zero line. You want to see that Mansfield relative strength zero line above its 52-week moving average, or on a daily chart its 252-day moving average. We go back to the weekly chart on that. So that was happening around this area here. So had a huge run and then started to pull back and develop into stage 3. So had a huge move back again. So 56% off from the highs here. So initially back into the later part of stage 2 here, rolling over and then starting to develop into stage 3. But big inverse head and shoulders pattern here before making a new continuation, and now just moving back out with a new continuation, but a huge move on the week, 44.31%. So quite extended in the short term. The swing rule move from here to here, from the old base, has already been met. It was around the 89 level, which is just under this high here. So we call that the measured move from the previous base there. So now breaking out into a new area. But if we go to a daily chart, I'll make this a little bit bigger, you can see on the free ATR levels that the earnings gap move has pushed it out above its standard range here. So it's extended in the short term at this point, and once it gets extended in the short term, you can see on a normal behavior, either some kind of consolidation or a pullback of some sort. So we'd expect it to be consolidating in this area. If it does start to drop back down below the earnings gap move, then that would be a short-term sign of weakness there and might suggest that it needs a lot more time. But at the moment, quite extended in the short term with this move. So, but it's had, since the lows, I think this one is up now over 3,000%. So huge moves, and still a favourite on FinTwit, for example. Let's move on to ASPN. It's another one making an earnings move continuation breakout. So this one popped out with a new stage 2 continuation. You can see the previous structure down here. So if you come down into this base here. You can see the original sell and climax, automatic reaction, secondary test, some up thrusting through here, and then some spring, a test, and then more up thrusting here, minor sign of strength before actually making the breakout. So this is your stage 2 breakout area here. So again, you've got some previous pivot lows through this area to consider around that area. So it's just starting to wedge its way out into stage 2 through this area here. So volume wasn't huge at the time, but you can see as the mantle relative strength started to push above its zero line at this point as well. So this is, again, as I was saying, key. You can see with the mantle relative strength zero line, when you move from, so we've got a little bit of break, that's probably the stage 4 breakdown was probably there. It was still the 30-week moving average was still rising at that point, but breaking down the actual breakdown level there. So you can see from this zone here, so we put that across, you can see the mantle relative strength breaking to the downside, and on the flip side, the mantle relative strength breaking to the upside. So sometimes that can be a really big clue of whether it's moving from stage 3 into stage 4 and from stage 1 into stage 2, as it's rare for the moves above and below the mantle relative strength zero line there. So if we go again on this one, let's get this down to a daily chart and go back in time a little bit, so you can see that older basis. This one had a really good initial base structure. So if you look at it on a daily, I'll find it, 2023, here we go. So you can see what happened in this base. So you've got your selling climax, as I said, the automatic reaction, your secondary test. So these are Wyckoff terms. So with those, with the selling climax and the automatic reaction, you can start to draw your base structure. So we draw a rectangular box across here and project it forward. And then you can see we've had some up thrusting at the top of the range. We had a spring, and then we had some testing through here. Last point of support, did start to make some attempts to move out. So this point through here was where it technically broke out into stage 2, made an early attempt that failed, a little bit of a double bottom pattern there before breaking out, and then that sign of strength rally and starting to push itself higher. So again, this one quite extended in the short term here. If I get the daily, and let's get the 3 ATR candles on this again, so you can see it's well above its normal range. So last time it got this extended above its normal range, it ended up going sideways for a while, so it could need to consolidate for a while here again. TMDX, another interesting one this week on huge volume following its earnings move. So breaking out to new, I think it was all-time highs with this one. If we go to a monthly, take that back. I think that's all it's got. No, let's get it back. So yeah, new all-time highs on this one as it moves out. But again, extended in the short term with such a huge move, big volume move low, and it has been consolidating from a while. So it did move from had a stage 4 move through this area, broke down a sharp recovery through here and started to grind its way back out again. So if we look at it on a more recent basis, it started to edge its way back out into stage 2. Potentially, this is your first pivot above the 200-day moving average, so roughly around this area, but not a very clean cut one, as it had just had this huge earnings gap move up here and then started to grind its way higher above that 1 ATR level here. So if we show you that on the line, so this is your sort of uptrending channel area with a few pullbacks below that to the 21-day moving average. So gone sideways for quite a long time now, but now making the new continuation breakout again above its normal daily range here. So might need to consolidate at the moment, so we'll see where that gets to. If we look at these on the stage analysis charts, didn't actually go through to these, and for Carvana and ASPN, so you can see Carvana on the stage analysis charts on the website. The SATA score has popped up to a 10, so we were a 7 to an 8 to a 10 now in the last 3 weeks. Still in overall, its group is fairly weak still, but only 28% of them on a strong score. So if we look into the actual automotive retail group here itself, so, and then actually let me pop onto a page so you can see the weekly changes. You can see there's only 4 this week that had a positive change, and the vast majority in the group actually had a negative change. So scroll up there, get out of the way. So you can see Carvana Get us back in order, is leading at the moment with +2 here. The strongest relative strength score as well, so one of the strongest in the market at the moment. I think it's third in the overall RS rankings there for that. So, but only, as I say, 27% of the group in the strong zone. So what that means is they're on a SATA score of 6 or above here. So they have 6 out of 10 of the quality stage 2 characteristics that we look for, and then you've got 3 in just in the neutral range here, and you've got the majority down here in the weak zone still. So come back in, look at ASPN as well. You can see it's actually in its group in a neutral range here. The sector's neutral. It's in the oil and gas equipment and services group. It has gone from a 5 to a 10 in a single week here, so you can see its scores improved. It's been above its Mansfield relative strength 0 line for a while here. So if we draw the structure through there, as I said, the breaking out into the stage 2 area, the clear breakout at this point through here, and it's now making a continuation move on heavy volume, but quite extended in the short term. Again, back to the 2021 highs back here, all the way over in the 65 area. Look, 65.99 from back there. So if we look at the group, it is again at the top of its range. Big relative strength with this. Tilled Water is the second in the group at the moment there. So, and then we look at TMDX, healthcare equipment. Again, a very weak area of the market. The majority of the stocks in the group are actually on a negative score, on a weak score. So, but you can see this one outperforming dramatically compared to the rest of its group. So top of the range here with that. TMDM has just been breaking out into stage 2 recently. Just quickly, I'll pop into that one, show you that. So you can see this making a new move and making a continuation breakout this week into early stage 2. Again, another one with a fair bit of overhead resistance to get through, but starting to grind its way through that. So come back through these. Let's move on. So Futu, also we've had the China theme over the last week or so. So this one has been popping for the last couple of weeks, making a new continuation breakout to new 52-week highs here at the moment. So had a huge stage 3 and then big stage 4 decline here. Multiple failed attempts to break out into stage 2, so highest level it's been for a while, since back in late 2022, but that one's definitely been a difficult one to get any traction on. Pins making an earnings move this week, so coming out from its base structure back here, really early attempt in here, was far too early. So one of the things we look for in stage analysis is overhead resistance is a key factor. So while this might not have obvious overhead resistance, this is what I've talked about previously as a beginner mistake. In order to move out from a small base structure after a big stage 4 decline, you need heavy volume. So Carvana did that because it had huge volume. This did not have huge volume. This had average volume, and hence it ground its way out and had a very, very hard time pushing out into stage 2 with multiple pullbacks before finally starting to get some volume and move out into stage 2 in earnest. So at the moment, we've been moving back in stage 3, potentially could make be making a stage 2 continuation here, but at the moment still within a structure of sorts at the moment. Eat with a new continuation breakout this week, back all the way back here, broke out into again a really, really grinding stage 2 move. Once again, a good example of big stage 4 decline, small base, and then just sort of grinding its way out into early stage 2 and not making much progress, and ultimately failing and rolling out until it actually makes a new move. So this is typical kind of behavior that you see with these big stage 4 decline and small base if it starts to break out. So as I said, it's a bit of a beginner mistake with stage analysis that lots of people they see a big decline and then they attempt to immediately get in at the stage 2 breakout point. But with a big decline, you need a much bigger base, and if it doesn't have a big base here, it tends to make a base structure at a higher level that then goes sideways for a long time. So you can end up getting stuck in a stock for 6 months or more with obviously not the greatest way to trade there. So you want to be looking for the more momentum moves, so waiting for it to get clear of that overhead resistance. Live Nation, another one moving out on heavy volume this week, so starting to clear some overhead resistance, so the broader structure here, so just getting clear of that much bigger base. So we'll see how this one develops here. Be looking for it to develop in this 60 to 65 area, whether it picks up, back up and move on. PBI, another big mover this week, clearing a lot of old overhead resistance here. So been in stage 2 for a little while. So this is your stage 2 breakout area, potentially back here, been going sideways for a while. So new continuation on that one. Lending Club is not yet convincingly out of the base structure here. It's right on the borderline, still got a lot of overhead through this area here. So until it gets above that $10 and potentially $11 area there, still got a bit of work to do, but the moving average, 30-week moving average is rising. So we're looking on a daily basis. You can see it's been above its 200-day for a little while, so attempting to move into stage 2 here on the daily basis, but the weekly's not yet convincing. LNTH with a new stage 2 breakout here, so broke down back through this area, but the 30-week was still rising at that point, so ground its way down. So now been basing on base type pattern on the way down here, and now starting to make a turn around the corner here. The 10-week moving average back around the 30-week. So we look at the daily chart on this, you can see earnings gap up move here, back around some older resistance areas low. So we need to see how this develops. 3M moving out into stage 2, again a very grinding move out into stage 2, not a lot of conviction, but managing to push its way higher a little bit here. So if we draw the structure across, got a little bit of a inverse head and shoulders look to it. Big stage 4 decline previously low, so we get our Ichimoku cloud on this, for example, to look at some of that old resistance. You can see it's just starting to get clear of some of that, but not a lot of conviction at the moment. ALHC, so this one, wanted to show you this because of the patterns. When I look at a chart like this, you immediately think of the Wyckoff structure here. So you've got preliminary support, then we've got a selling climax, automatic reaction, secondary test. So we can draw our box across here. So what we've got down here is what we call a shakeout and a test. And now we've got a significant bar on some volume coming back through. So this failed move here, this up thrust, so it's looking to reverse itself back up again. So we can hold above that 30-week moving average, start to build through here, potentially could have that stage 2 breakout, then the back up, and then potentially start to push its way out. If we're looking on a daily basis, let's go down to the, where are we? Oh, I need a broader chart. How big's that base? Yeah, it's a bigger base. I need a little bit more. So been going sideways for the best part of a year here, maybe even more than that. Yeah, still going. There we go. You can see it better now. So you've got your selling climax, your automatic reaction, and rally, secondary test. So it's starting to draw your structure across here. We've got these up thrusts, a failed breakout attempt, and now we've got the shakeout and the test and the significant bar. So back at its 200-day moving average here. So again, Wyckoff characteristics in the base structure here. So looking for this to push out, start to make a stage 2 breakout, push its way up. Axstar also with a new continuation breakout attempt, bit of a violent W bottom here at the moment on that. ARLP from the coal group. So let's make this a little bit shorter. I'll be able to see a bit better, even more than that. Put that to 2 years. That's better. You can see a little bit better now. So just making a new stage 2 continuation, starting to clear the old highs here. So this one's had a bit of a grind over the last year, but pushing up to new highs on volume. If it does reverse here, it could obviously turn into an up thrust, but looking for it to push higher in stage 2. Got AMCR with an earlier move into stage 2 here. It's a new stage 2 breakout attempt at the moment. Calanova, also recent stage 2 move. So Let's go to the daily on this one. See the pivot above the 200-day is a rough guide a lot of the time for the stage 2 breakout level to watch for. So we start to draw lines across here. So we've got a secondary move down here. So technically it might around this area or this area. So you need to delve into it a little bit more to fine tune the breakout level there. But now making a continuation breakout. Then we're back to Carvana.